Guys, Dave with Moneyology here. Hope everyone is having a great weekend. Today is November 9th, 2019, and this is the weekend market review. For those of you new to our videos, this is where we go through the markets from a weekly perspective to try to remove some of the short-term noise that we see day to day, hour to hour in the markets, get a better sense of where the markets have been, where we are, and where we're likely headed. I think that those of you who've been watching my videos, especially over the last couple of months, I think we really got the pulse on the market pretty well, and I'm pretty confident that this video will point you to a direction where I think the market is headed, and I think you're going to be handsomely rewarded if you really heed some of the messages that you'll see in the video. Anyway, let's take a look and stay tuned. All right, so starting with the 10-year U.S. Treasury yield, we pointed out last week, the last week's video said follow through. That was the title of the video, and the belief there was that the markets had just broken out, the equity markets, and that we needed to follow through to confirm that that this move was legit, and that we're not going to see a fake breakout and then perhaps a breakdown. Well, this week we got our follow through, and we had a number of other things taking place, which we'll go through in the video, that are very, very bullish longer term for the equity market. So starting with the 10-year U.S. Treasury here, notice we said in previous videos that we expect to move towards 2.1. Eventually, this move can go as high as perhaps 2.5, possibly as high as 2.65 before I think this move ultimately runs out of steam. But notice we closed the week above the 50 RSI. That's a very positive development, and that confirms, by the way, we closed also above the 26 week moving average. So we're in a medium-term uptrend in Treasury yield. So a lot of folks, when we're going to get up here, a lot of folks will say, well, yields are going back up to 3% and 4% and so on. I don't think that's going to happen. I think we're going to move up around this area, and then we're probably going to start pulling back and perhaps going to new lows in interest rates. But in the meantime, a lot of opportunity to play the fixed income markets and perhaps go short some of the interest rate sensitive equity markets such as REITs and you'll see what I mean later on. All right, so Dow Jones Wilshire 2500 index. Notice very clear breakout here to all-time highs. Breakout in RSI over here. And while there are going to be pullbacks, I would not at all be surprised if we pulled back to the 7,400 level to back test it. But bottom line is we're in a new uptrend, and you don't want to be short equities at this juncture. Copper, the theme of this video, I guess we'll go into right now, is that commodities are starting to really break out, and momentum is always leading the market, and you'll see in various ETFs that we'll cover. Copper is one of them, but you'll see energy sector, uranium, metals, base metals, just general commodities, lithium, steel, they're all breaking out, and so that gives you an indicator of what's actually taking place in the overall economy. I think that you're going to see a multi-year period of commodity breakouts, and we want to be on top of it. So this week, in the premium subscribers, we will review the base metal sector. We're going to review a lithium premium sector, and we're probably going to take a look at energy as well. So a number of premium reviews, and I very much look forward to having you be a part of those reviews. But bottom line is copper here. Notice we're consolidating above the 50 RSI level. Very, very important. Although price has not yet broken out in copper, I think it's very, very close. Momentum and various different oscillators are really, really performing nicely. And as you've seen in previous copper videos, I think that many copper stocks have already bottomed, Freeport-McMoRan being the foremost name, but so many others. Look through the past videos and you'll see copper names are really, really well positioned to take advantage of this move. Emerging markets. So this emerging markets really benefit when you see a breakout in equity markets, but also when you see a breakout in commodities. That's taking place right here. When we broke out at this level, I think that was your sign to go long. And I mentioned that I fully expect a retest of at least those 51 level, that 51 level on the EM. Now, I will point out that we are approaching that 61 level right here on RSI. That also happens to be the level where we last broke down from. So a pullback here would not at all surprise me. But I don't think this pullback is going to be sustainable, and eventually will reverse course and perhaps go higher, something like that. Gold. So in last week's premium video, I pointed out that gold, and also in the public video, I pointed out that gold was kind of in no man's land, and that it could either break out right away, or it could pull back to the 1400 level, 1440 to 1400 level. And here's why: because you've had several weeks of negative divergence and a momentum breakdown in gold, and so right here, we're breaking down below the 13 EMA. We broke down last week, down about 3.25%. We're taking aim at that 26 EMA around 1450 right now, and I think probably a break below that level to shake out some more longs, and we'll probably do the trick, and then we'll probably consolidate here for a while, and then eventually very likely move back higher. We're also approaching that 50 RSI level, which is the level where we really last broke out from, right over here, right? So this is the level that you're going to have to watch, that 50 RSI level. If that breaks to the downside, I think the gold narrative is broken. I don't think it's going to happen, but we have to be open to all the possibilities. In the premium video that we posted, we covered 27 names that we believe are worth owning in the precious metals portfolio. That will do exceptionally well if the markets are flat. Will do exceptionally well if the markets rise, and won't fall as much even if gold continues to pull back. So I highly encourage you to take a look at that video, and that's available both on Patreon at Moneyology and for premium subscribers. But this 50 level of RSI, is definitely one to watch. High yield junk bonds. Okay, so even though we're slightly decelerating in momentum, we're still very much in bullish territory. So long as that 13 and 26 EMAs are held, I think that the markets are firmly in bullish control. Housing index. So housing it has pulled back a little bit. It's the uptrend that it's been in since I would say since October of 2017. 18 rather, has broken right here, at least in terms of momentum. So I think we're going to see a multi-week pullback. That's in large part due to interest rates really starting to rally. I think that's going to impact housing, and so we'll see how far this goes. I think this trend line likely holds here, but I'm watching this very closely because this is going to be, in my opinion, the first crack in the economy. If interest rates rise too fast, then housing could really start taking a hit, and it can impact the overall economy. Notice, even though the markets really bottomed here in December, housing bottomed back in October. So that was my first sign that the markets were not going to crash, if you will. And now we're starting to see some cracks here. So watch this index closely. It might show some first signs of weakness. Crude oil breakout right here. That's very, very important. There's a slight breakout as well in momentum. Crude oil is starting to break out. As you'll see, commodities are starting to break out. NASDAQ breaking out to all-time highs, momentum, price, PPO, all very, very bullish. Let's go through here, a couple of ratio charts. So here's the ratio of the yield curve swap. So what happened here? The media was talking about how yield curve was about to go negative, and that's a sign that the economy was about to go into recession, and how you should sell all your equities. What happened here? Well, the yield curve did not go negative. We went flat on the 2 to 10 year, and we reversed course, and looks like we're about to break out. Notice we've already broken out of this downtrend. And this is going to break to the upside. So the yield curve is starting to slope higher, and that's a very positive thing for the sign for the overall economy. I don't know how long that's going to sustain itself, but the reality is that the media is not covering this right now, and the reason being is because doesn't fit their doom and gloom narrative. So, but this is very positive for the overall equity markets. Here's the junk bond versus the high not high yield, but the high quality credit, and the junk bonds are breaking out against traditional bonds. That's a positive sign for the overall economy here. Here's the TLT to the tip ratio. This is the ratio that it's basically inflation versus deflation, and so inflation is a bullish is a bullish sign for the equity markets, and deflation is negative. And when this ratio breaks down, that's a very that's the deflation ratio breaking down against inflation. That's what you're seeing here. And notice major breakdown in RSI this week. So I mentioned that we're likely headed to this level, might be headed even lower. So for the time being, markets are in definitely risk on mode. Perhaps the only ratio that hasn't really broken out are the consumer discretionary stocks versus the staples. Now, it has broken out in terms of momentum, but I don't see a massive rush towards consumer discretionary right now. Staples are still getting a bid right now. So, but definitely not negative. And notice the breakout on PPO. So it's certainly coming. Here you see the equal weight S&P breaking out to new highs. Here's the S&P SPX index breaking out to new all-time highs. Momentum's broken the downtrend, and here we go. Banking as well. Look at that. We broke out above this multi-year consolidation. Well, actually, this is just one-year consolidation, but we broke out, and looks like banking is headed to retest those 2018 highs. I would say this is a great level. If we get to this level, this is a great level to potentially short, because I don't think the interest rates will go up past the 2.5 level. But once they get to that level, I think this index will hit those highs. So it's a great buying opportunity, in my opinion. Great risk reward. Buy here, stop loss here, and see the ride to the upside. And then if interest rates hit some resistance points, that's where you can start looking to go short the banking sector, but not now. Semiconductors breaking out to all-time highs. Momentum is about to break out above the 69 level, so all looks good there. Here's the SPY, just another view. Total stock market ETF breaking out to new highs. So as you see here, it's all rosy right now, and this is all very good sign if you're an equity bull. Here's the Dow Transports breaking out to new highs, and this is what's interesting though. The U.S. dollar has rallied off this trend line and looks to be potentially on the verge of a breakout versus a breakdown. So I'm watching this level closely. What happens here will determine a lot. What's very interesting about it is I see all the commodity charts on the verge of a breakout, but that's very difficult to happen if the U.S. dollar is breaking out at the same time. So is this a fake last hurrah rally? Time will tell. I'm very curious to see what happens here. The Vanguard developed markets breaking out, not to all-time highs, but it's certainly moving really nicely in the upward trajectory. And at the same time, we're at this $12 or $12 range, I guess, if you will, on the VIX. And I pointed out before that I think this level is going to break. And when it breaks, you're going to see this massive rush toward risk on trades. And I think this is going to be the level where it's going to find long-term support. So VIX, very much, a lot of folks are going to be buying here, right? At this level where we found support over the last 2 years. But once that breaks, you're going to see a rush into equity markets. Here's the Wilshire 5000 breakout. All right, so that's it from here. Let's take a look at just some of this ETF. So I selected just 6 names. XLEs, that's the energy sector ETF. And I'll point out just the consistent theme. Downtrend since 2018 has been broken to the upside here in momentum. So although price hasn't yet broken out, this is where you want to go long. And obviously, this is a great risk reward here, around 60, with a first target of 76. I think it actually will break out, but probably not on the first try. Here's uranium. It's been in a downtrend since 2017. Frankly, it's been in a downtrend since 2011, but it's on the verge. Momentum has already broken out. So I expect to see a major rally in uranium. You've seen my videos. Despite the pain in some of the super speculative junior miners, you're seeing a sector that's really, really close to breaking out. Invesco base metals fund, this is breaking out. Notice we're above the 50 RSI level here, and we're close to this 1, 2, 3, 4, 4 inflection points. We've fallen back every single time. I believe this time is different. You see the MACDs breaking out really nicely with five straight weeks of positive price action. I think we're very close to an upside breakout here. Here's a metals and mining ETF, so similar to the base metals, breaking out here in price and also breaking out here in momentum. 1, 2, 3, 4, 5, 6, basically 6 times that this was tested and could not break out. Well, now it's breaking out, and again, a risk reward when you have these sideways breakouts. The risk reward is really, really clean. So the downsides around that 20, I would say 26 and a half, and the upside is 38. So you risk a couple percentage downside and 20-30% upside, and then obviously we'll cover the individual names, and you might see 100% plus gains when the sector breaks out, as it's starting to do. Lithium, look at that beautiful breakout. It's broken out in price. It's broken out in momentum. And lithium is an area that we're going to be covering. I think we're headed back towards that 40 level in lithium, and you're going to see some really, really exciting gains in the sector. And then finally, for this video, is steel, and it's on the verge of a breaking out. It's broken out in terms of momentum, and you're going to see a move back towards those 49 levels. So a lot of upside in commodities, inflation. That's the theme, and I think you're going to start hearing the term stagflation sooner rather than later in an overall global economy. But in the meantime, enjoy the equity gains, trim perhaps some fixed income exposure in the near term, and we'll see what happens next week. Have a great week. Take care.